Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great weekend as we were treated with huge movements, and I say treated very loosely, with huge movements on the Sunday Open as we are in a limit down situation in our equity markets after some huge news out of between the Saudi Arabia and Russia price war with crude oil and continued pressure on the markets from the coronavirus COVID-19. What do we do in these kind of market conditions? And I can't put it more plainly than this. What do we do in these kind of market conditions? We don't overreact. That's the best advice I can give anybody, is to not overreact in these market conditions. And if it's starting to move fast and you're not in, don't necessarily try to be in. I say this regularly, but I say the three richest men that ever lived are Mr. Shoulda, Mr. Coulda, Mr. Woulda, and I don't necessarily need to always be a part of every single move. So that's my public service announcement, but we are going to go through and talk about each of these markets. Real quick announcement, if you're new to the channel, make sure that you click the subscribe button, hit the notification bell. But this channel, if you are watching this on my personal Chuck Fulkerson YouTube page, we will actually be discontinuing the daily market commentary on this page as of April 1st. So April 1st, we're going to start posting them only to the Traders Army page. So go to youtube.com/Traders Army and make sure that you subscribe to the Traders Army page, as that's where we're going to host all of the daily market commentary. So I'm going to make the transition in the first week of April. So please, if you're not already a subscriber of the Traders Army page, do so today. All right, let's go ahead and dive in. So S&P is down 145 points, but which is obviously a humongous number. But really, when I look at, say, the 15-minute chart, what you'll notice is that we have this low here of 28.19, and we have not gotten below 28.19, right? We're sitting at 28.19 because that is our limit down number. That's as far down as we're going to go before the cash session opens up. We can't get any lower than that because it triggers the circuit breakers. The circuit breakers trigger, and they stop trading. Now, this stemmed from the big gap down followed by a very strong move. So obviously, I believe that we're going to continue to trade down once the markets open up. Matter of fact, we may see another gap down once we open back up this morning. As far as when we look at the amount of sell orders that are piling up, if you look at the orders here sitting there on the ask, we've got a bunch of orders piled up there on the ask, and we've got 21 down here on the bid. So currently, this is our spread, right? We've got a 4-point wide spread in the S&P, which is almost unheard of, right? We've got 28.19 on the ask, 21 over there on the bid. And so not something I normally spend some time and take a look at, but it is something we need to consider, that when the markets do open back up, there's going to be a flood of sell orders. There's not going to be enough buy orders to fulfill that, and that's typically what causes price to gap down. So all of the demand levels below me need to go away. We're not interested, for the most part, in those demand levels. I need to look a significantly amount lower. And I think that when I look at where the next true area of demand is, I'm coming to a weekly chart, and I come to this area down here. So when I'm looking at our weekly areas, I've got to come all the way down here for our next demand of any strength, and that's sitting at 26.77. Now, is it possible we could drop another 200 points today? Well, that's kind of what I'm looking at, is that there are the potentials for that kind of a move down. Just be aware of that. If you're not in the position, I don't think it makes sense to chase. I think chasing the market is probably not the greatest idea. I think it's going to make a lot more sense to allow price to come into a level of supply with an opportunity then to get short at that point. As it stands right now, I don't have that level of supply up above me, aside from this the gap fill area in here. Now, we did have a Friday afternoon touch of our 15-minute level, but my guess is most people didn't hold that thing over the weekend and take advantage of that gap down, because that's really one of the things that we caution against, is holding futures markets over a weekend in a gap situation. The Nasdaq, same picture in the Nasdaq as we are in the same situation. So looking at the Nasdaq on a weekly chart, we're going down to the weekly. Our level is this 79.36 area, so it's a little bit closer in the Nasdaq where we have some supply than the other markets. Now, crude oil is really where most of this problem started, right? As crude oil gapped way down, about 20% on the gap down in crude, traded down as low as $27 and has rallied back up a little bit in the overnights. I think there's a chance that we'll rally up again and make it back into this region up in here, which would be about 50%. Keep an eye. I always keep an eye on 50% of a gap fill retracement for a candle to candle area to kind of open up. Obviously, there's going to be a gap fill trade when we get to that area. I'm just not sure we're going to, right? So we'll see if we make it back up into that area anytime soon. It may take a little bit of time. Next would be our gold markets. So our gold markets have continued to rally, and we're seeing the gold markets rally straight up. And as the gold markets rally up and go a bit higher, we've started to base right in this area, 1704. And so I think that sets up for a pretty good little breakout. If price comes back up above there, we've got the opportunity to get a bit higher from that level. As far as a reversal trade, we came really close to this level down here on Friday, so I need to switch it to a confirmation entry. All right. Looking at our bond and currency markets, in our bond markets on our hourly chart, we are just chopping along sideways. We looked at this for a breakout last night, and we got a little bit of the actual breakout. 1, 2, 3, 4, 5, 6 candles later, we had gone basically nowhere. So if you stayed up, that's the opportunity to move your stop to break even, and you may still be in the position, and if you are, you're doing okay. But just keep an eye. I would have your stop at break even, because I'm always cautious when we're not moving up here. Now, we're not moving in the bonds because we've stopped trading in the equities. So there's none of that negative correlation at this point to look at. When I go to the Aussie now, the Aussie on the open of the Aussie market, it completely fell apart. I mean, to a tune that I have not seen before. Even if you look at this on a daily chart, that is a humongous candlestick. Now, almost all of it has been retraced. Actually, all of it has been retraced at this point. So that huge move down, which just wiped out intraday traders, has already come back and been retraced. And so this is why oftentimes in oil and in the equity markets, it's going to be important not to overreact and try to chase something. Wait for price to come to you so that then you can react accordingly. And now it came back into our little 15-minute supply area. And that little 15-minute supply area, if you look at it, we've already gotten a 3-to-1 reward to risk move out of that 3-to-1, out of that little level. So in these markets, I think it's important to remember this. Yeah, we're getting humongous moves, but I would still take your profits at 2-to-1. I would still take some profits off the table at 2-to-1 and manage my stop accordingly so that I don't take unnecessary risk. And this Aussie trade's a really good example of that. All right. Now, remember, any demand level is a confirmation long at this point anyway. So that is also the piece to kind of consider when I look at this, because our 4-hour chart is most decidedly in a down. We had gapped down, and immediately we traded up pretty hard on this piece. But just keep this area in mind. If we get a rollover here, price could continue to fall. Next, in the euro. So our euro position, we came up and touched our euro level. And got a little bit of a move away, but really it's done not a whole lot since then. I can switch this over to a confirmation at this point. And looking at that, we're chopping along sideways. We certainly have the gap fill level here, but I actually like the level below the gap fill just based on the time of day that it was created. The other one to take a look at today is the Canadian dollar, as it took a huge move down. with the oil movements. And so we saw that we gapped down, had the big sell-off at the Australian market open, just like the Aussie dollar did. And now we're starting to see that it's gained a little bit of momentum. Not as much momentum though as the Aussie, right? The Aussie came back to its essentially its opening of the time from when it really started to fall off. The crude oil is really affecting Canadian dollar. And so we put a little area in here. This is the 50% retracement. If we do rally up to here today, keep an eye that this could be a candle-to-candle area for a reversal at some point today. That's a 50% retracement of our gap amount. So keep that area in mind today. Looking at our Great British Pound as well as the Japanese yen. So the Great British Pound and Japanese yen levels, we had a little bit of a pound supply area. We did make it up to that supply area in the pound, and now that's because of our, let me maximize that sell, make it bigger, because of our overall trend direction. That has to be a confirmation entry, and we did get a nice little touch into this zone, and we're getting a good little move away from that confirmation entry. So if you took that one, you're getting a little bit of a run from that zone. Keep an eye. Your first target should be at the 2-to-1 level, and then I think you've got a really good area of demand down here for a potential long. And then last but certainly not least, Japanese yen. We gapped up on the yen and got through our resistance area that we have in here. And so the next level that I would be taking a look at is we're putting a little bit of a bull flag pattern in. So oftentimes this becomes a potential breakout area. And so I can't stress this enough. Don't overreact. Even in a market like this, you don't get off of your plan. And just because the dang thing moves 1,000 points doesn't mean you have to be involved. Don't feel like you're missing out on these markets, because these markets are always going to give you an opportunity. But taking a bad opportunity because you feel like you have to be in, it's not worth your valuable capital. So hope you guys have a great day. As always, if there's anything I can do, please feel free to reach out. Once again, make sure you go to the youtube.com/tradersarmy so that you can subscribe to that channel, as we will be migrating the daily market commentary over to there as of April the 1st. So I'll talk to you soon, everybody. Have a great day. See ya.